Hi, I'm Charlie Mattingly with Leading Edge Financial Planning, and today we want to talk to you about voluntary loss of license. We know open enrollment is coming up quick next couple weeks, and we just wanted to put out a little primer on voluntary loss of license, just some basics, and more importantly, all the changes that have taken place. Now, today's video is going to be specific to Southwest Airlines and how it integrates with the underlying company paid loss of license and possibly even long-term disability. Now, voluntary loss of license applies to every pilot in every industry at every airline. Crop duster pilots, military pilots, commercial pilots can all get this insurance through Peterson International Underwriters. However, today is going to be specific to Southwest, like I said, because of the underlying other programs if you were to become disabled. So if you have questions about other airline programs or this insurance in general, just give our office a call or email today. We look forward to hearing from you. But as far as the Southwest and SWAPA open enrollment, we're specifically talking about voluntary loss of license. There's a couple different open enrollments going on, sometimes simultaneously, but today will be specific to the voluntary loss of license. And oh, by the way, we're not associated with Southwest Airlines or SWAPA. I am a recently retired pilot from the voluntary separation plan, so I'm very familiar with these. Plus, we work with a lot of airline families and Southwest airline families in particular. As far as resources are concerned, there's tons of great resources out there. SWAPA has done a great job. Damien, Jeanette, and the gang at SWAPA have put out a lot of great information. So I encourage you to go to swapa.org, go to committees, and then benefits, Aero Medical, and check out everything they have. There's some really good videos and some things they've put together there, especially this disability calculator. Highly recommend you check that out at swapa.org. It's in the same location, benefits Aero Medical page. And run your numbers. Put in your sick time, your type of short-term disability that you have. The only thing it's not going to show you, I believe, is it's not going to show you if you do have voluntary loss of license, what that looks like integrated into that. So we'll try to show you a little bit of that today. But finally, we're a resource as well. Just give us a call or email anytime. And if you want to set up a 15 to 20 minute discussion, you can go to this website and do that on my calendar. If you want a more thorough look, then maybe we'll set something up to do an engagement and we can look at all of your circumstances and decide what's best for you and your family. All right. So first of all, the specifics. The open enrollment dates, 15 October through 30 October. Again, that's specific to voluntary loss of license. There is an exception there. If your pay changes significantly, then if you have proof of that pay change, I guess that would be a pay stub, then you can call Peterson Underwriter or International Underwriters, and you can get a change done outside of this open enrollment period. In fact, if you have questions at any time, you can call Eric Foote at Peterson International Underwriters. Here's his contact information. I talk to him all the time. He's a great resource and very helpful. So don't hesitate to reach out to him as well. All right. So what are the basics of voluntary loss of license? This program was it's actually started about 3 years ago. SWAPA went out with Peterson International Underwriters and developed a program for pilots to add this essentially loss of license insurance on top of the company paid loss of license insurance. The origination comes from basically pilots making more money, living off of more money, and also being capped at total disability at $12,500 a month. In other words, if you're a captain, high-flying, high-time captain making $20,000 or more a month, it's going to be quite a change to go from $20,000 a month to $12,500 a month if you become disabled. That was part of the reason. How much is it? You can get as much as you want. It really depends on how much you're making. I'll show you some examples in a minute. But when you go to apply, and I'll show you what it looks like, I received this email just like you may have received as well. You go apply now. They'll have a calculator for you, and you put in basically how much money that you make, and we'll talk about this definition in a minute. Put that in there, and again, they've actually kind of clarified that for you here as far as excluding profit sharing, excess, 401k, NEC, and 415. So that's a change. Again, a change we'll talk about in a minute. Makes it simpler to calculate this, but it translates into less insurance going forward. You can use this slider scale to determine how much you need, how much you want. That's the maximum for that level of income. And there's the premium for my age. And so basically, it's going to be different depending on your age. We'll cover some more details on that in a minute. But The elimination period, this is not going to take effect. This insurance is not going to take effect until 6 months. Benefit period is 5 years or age 65, whichever is less. There's also a change of not more than 24 months if you're signing up at age 60 and above. So your benefit period is now 2 years instead of 5 if you're signing up and you're 60 or older at the time of issue there. Benefits are tax-free. Unlike other, we're doing open enrollment right now, and when you make those changes at open enrollment, whether that's health insurance or whatever, those changes take place January 1 of next year. This insurance takes place immediately. As soon as you pay your premium, you are insured by Peterson International and voluntary loss of license. All right, the max benefit, $25,000. That's not going to be a player. You have to be an airline pilot making about $640,000. It's not going to be a player for a while, unfortunately. Maybe it will be again in the future. Blends with our Southwest Airlines paid loss of license program. It just stacks on top of that, basically, up to 67% of your income. So let's talk about this one. This is a big deal. What's different now, and many of you know that Peterson International has been the organization that we go through. Let's call them the broker. I'm not sure if that's the right term in their industry or not, but they used Lloyd's of London previously to do this insurance, to underwrite this insurance. Lloyd's of London said, we're out. It's not profitable for us. Don't know why. There's been too many claims. Maybe it was too generous in the initial terms. So now Axis Specialty has taken over. Now, to you and I, that's pretty much transparent. We're not going to know who the underwriter is, except when we go, if we become disabled and we file a claim. So here's what's happened since Axis is now the underwriter. There's been some changes, and the changes are as follows. 2/3 of your income can be replaced now versus 75% previously. I think that change was already in the works when Lloyd's of London was with us. But anyway, rates have gone up a lot. Depending on your age, it may have gone up more or less than 20%. I think when I talked to Eric at Peterson, he said that if you're 55 to 60, those rates probably have gone up the most. Like we talked about already, only earned income is the biggest, one of the biggest differences, because that affects how much you can insure yourself for. Again, we used to be able to count 415 excess, 401A17, all of profit sharing. Now, the fine print says that, and you saw in the application, that earned income does not include profit sharing excess, 401k NEC, and 415. Now, when I talked to Eric, he said that Southwest profit sharing is also not included. That's kind of a big deal, except for the fact that during this time, we don't really anticipate a whole lot of profit sharing in the next year or two. So quite honestly, unfortunately, pay is probably going to be, whatever you make is probably going to be what you're covered for. In other words, you make $200,000, that's what you're going to put in the calculator. I skipped over it, but no more lump sum option. Used to be you could insure, if you were still disabled at the end of the 5 years, you could sign up and get a lump sum to help you as well. That's not an option anymore. It's going to renew annually now instead of every 3 years, and it will increase because you're 1 year older. And your income now is determined. They do a look back. They look at 2 years of your income and then just take that average. So that's going to be one of the differences. Also, if you're signing up, again, like myself, I would just go in here to this email. I would click on sign up. They don't even ask about pre-existing conditions because I've already had the insurance. They're not going to even ask about it. However, if you are signing up for the first time, they are going to ask you, one of these questions here is going to ask you about pre-existing conditions. And it's probably going to ask you about any pre-existing conditions in the past 2 years. I think that is a change as well. So it used to be a much shorter time period. Okay, so those are the big changes, and there are quite a few, and they are significant. So now we'll cover a couple more things before we wrap up for today. I'll try to address the question of should I have voluntary loss of license and how much should I have? We can't help you with how much it's going to cost. It just depends on your age, depends on any pre-existing conditions if you're signing up for the first time. So why should you have voluntary loss of license? First of all, there's a couple things you need to think about. One of them is if I become disabled and I'm getting company paid loss of license and long-term disability, which the maximum will be $12,500 or 2/3 of your pre-disability income, whichever's less, can I pay my bills on that? Can I have a decent life on that income? And then the second question is, if that one is yes, the second question is, how much money can I save? You need to think about the long term and think about your financial plan as far as retirement. We do a lot of projections all the time, and we look, hey, if you save this much every year, if you get this rate of return. However, what if you become disabled and for 5, 6, 7, 8 years, you don't save anything? You're not able to save anything. Well, that's going to drastically affect your financial plan, your retirement plan and your retirement income. It's going to be much, much less. So think about, first of all, your ability to pay your bills, have a good life if you are disabled and not able to fly. And secondly, can I save any money for retirement? Because if you can't, you probably need this insurance because your retirement will be negatively affected. And to me, this is just my opinion, but in general, if you're a higher income earner at Southwest or any airline, if you have higher expenses to go with that, in other words, you can't live on $12,500, you need $20,000 every month to live on, then you probably need this insurance. Those of you that have military pensions, that does kind of provide you extra income in case you're disabled. So sometimes I've seen a lot of people with Air Force, Navy pensions, and they say, hey, I'm good because of my pension, I'm fine, because you're still going to receive that if you're disabled. Those are some of the questions that I think about, and again, just my opinion on how to determine how much or if I need voluntary loss of license insurance at all. This is an eye chart, I know, but hang with me just for a second. I wanted to demonstrate a couple things real quick and kind of show when voluntary loss of license is the most valuable. Here in the different colors, we have the 3 different, we'll call them disability insurance programs. And these are long-term. I'm excluding short-term disability and sick time. Those also count, but they're more short-term. These are basically 6 months or longer. So we've got loss of license insurance. That's paid by Southwest Airlines. And this is all, I assumed, a tax-free benefit, by the way, which I do actually recommend, a tax-free benefit. But that's up to you. And then here's voluntary loss of license. Again, that is you're only going to be able to get insured above what you're getting for in loss of license up to 67% of your pre-disability income. I'll go over an example in a second. And then the third is a long-term disability. Okay, so let's take 200 as an example. Basically, I do not get to count, we think, profit sharing. Nonetheless, we probably won't have any anyway for a year or two, unfortunately. We do not count these, and we do not count that one. So our income that we use in that calculator is $200,000. Pretty simple now. So my income per month is that's gross income before taxes. 67% is that. That's the most I can insure for company paid Southwest loss of license. That's 60% of your pre-disability. So 60% of 16,666 is about 10,000. Hope that math is right. So then I can only get a maximum of 11,166 and 67 cents. So that's the voluntary loss of license I can buy. Now I can also get long-term disability on top of that. So that provides me with some. Those are the options that I have. So basically, I just want to show you a trend. I know this can all be confusing. The point of this chart, though, is to show you the trend, and I've kind of outlined it in blue. When you're at some lower income, levels, and relatively speaking, obviously, it's a good living, of course, but you may not need, you're only going to be, the difference in insurance you can get is about $875 at $150,000. And it goes up to $1,283. Now, if you've got a military pension or you become disabled and you say, hey, look, I can live off of, this amount of money, I can be fine. I can save for retirement, I'm fine. However, when you start making, and I arbitrarily colored this blue and from here down, but when you start making more money, the difference between what you can get insurance for and your actual income, or what you could be able to get insurance for, including voluntary loss of license, is significantly different. So in other words, let's take an extreme example. Let's go down here to 350. At 350, if I just have a loss of license and long-term disability, I'm going to get $12,500 a month. Again, that's assuming you've selected tax-free benefits. If I add in voluntary loss of license at that point, I could get $20,541 tax-free if I'm disabled. So that is a massive difference. So now, again, if I'm used to living on, again, this is gross income. If I'm used to living on $20,000, $29,000, almost $30,000 gross income a year, it's going to be really difficult to come down to $12,500 probably. Your lifestyle will be drastically affected if you're used to living on that. And you might not be able to save anything for retirement. So I highlighted in blue, just my opinion, when voluntary loss of license becomes really valuable. So I hope that helps a little bit. I know this graph can be confusing. If you want to go through it in more detail, we can even put your particular situation in there as well. So I hope that helps a little bit. If you have any questions, just give us a call. Like we said earlier, if you want to talk for 15 to 20 minutes, we'd love to chat with you. If you want a more thorough review, give us a call and we'll look at all the circumstances. We'll go through it together. Either way, just give me an email or phone call. We'll be happy to talk to you. Hope this was helpful. Reach out to us anytime. We'd love to hear from you. Thank you very much.